Hi, my friend, Caleb Johnson here, and I have a huge question to ask you, real estate investors. How would you rate your level of personal discipline on a scale of 1 to 10? If your answer is anything less than a 10, I've got something neat for you. And let me tell you, discipline means pushing yourself beyond your comfort zone and doing things that are difficult and sometimes boring. Achieving massive success requires you to do those difficult things. Building your levels of personal discipline is not easy, but it does pay off. In fact, you can't achieve anything significant without discipline. Now, I just released a program for investors where I walk with you as an accountability coach to aid you stay on track so you can push yourself to do the hard things that greatness is going to require of you. Starting is easy. Go to redseacapitalgroup.com and click accountability coaching at the top right of the screen. So let's get to work, and now to the interview. Welcome back, everyone. This is Caleb Johnson, host of From Trial to Triumph. Today we have Zee Langford. Zee, welcome to the show.
Hey, Caleb. Thanks for having me on.
Great to have you, man. Zee, can you go ahead and give our listeners just a quick background story about yourself?
Yeah, so I've been just a little bit everywhere in the entrepreneurial road. Started just right out of college in IT, bounced around to a wedding venue, then to e-commerce, and finally landed into real estate, short-term rentals, which is, I think, going to be the focus today. We've been in short-term rentals for just a little over 2 years now. One of my business partners has been in short-term rentals a little bit longer, but that is our niche focus, is short-term rentals. And it's been a wild ride from 2020 to today. We've accumulated a little over 100 units under management and been able to purchase, syndicate, and partner with other individuals along the way, so that way we get a little bit more skin in the game and have a little bit more on the line when it comes to actually producing income for investors and owners.
Mm-hmm. Well, I love that, man. And again, like you said, this show is going to be really kind of focused on short-term rentals because we've never had someone like yourself on the show. So I'm really excited. So starting off in 2020 back then, it's about 3 years later, and we're at a different state in the market. So where do you see the differences back then to where we are today?
Back then it still is a little bit, but back then it was the Wild West. No matter what market we were in, there weren't a ton of regulations. If there were, they were just starting out. Today we're seeing regulations come in all over the country, and many different municipalities are voting on how they're going to do that. If they're not voting on it currently, they have committees researching it. So it's really starting to become more regulated. I know that's been a large risk factor that a lot of individuals have been scared about, but so far there's no places that are outright banning short-term rentals. They are seeing them as a supplemental to their economy and pivotal to their economies. So there have been a few outright bans, but nothing too terrible, nothing that you can't protect yourself against.
Okay. Yeah, I'd like to talk about that a little bit more. You know, if someone has the objection to short-term rentals and they say, I don't want to invest in that space because what if I own a property and it's cash flowing great, but because it's a short-term rental? And so worst case scenario, the county bans short-term rentals and I have to go to a long-term rental strategy, but my property doesn't even cash flow at that point. So what do you say to that person that has that concern?
First and foremost, when we're looking at purchasing properties, we run performas twofold. We run a short-term rental performa, we run a mid-term rental performa, and then we run a long-term. And we are not personally purchasing any properties that wouldn't at least break even from a cash flow standpoint on a long-term. If we need to pivot to that, at least we can pivot, break even while we exit the property, versus exactly the scenario you just presented where, okay, I have a short-term rental, county comes in and bans this, city comes in and bans this, now I can't do it anymore. Most of the time they're grandfathering people in, but let's run that scenario, and now I'm losing money every single month. That could be really detrimental to somebody's portfolio. That's why we're running performers in multiple different scenarios, therefore it's not going to be a factor. If they do get to that point, we can pivot and go to a different direction.
Mm-hmm. I'm glad that you said that because I've pursued a couple of properties that are short-term rentals and they haven't gone through. But, if it's pretty tight, if it goes the long-term rental route. So I'm glad that you're conservative and are looking at those numbers. Now, whenever you're looking at a market to invest in, what do you really look for?
First thing we look for are the restrictions and the regulations. What are
Mm-hmm.
they? Are we in a market, for example, our biggest market is Lake of the Ozarks in Missouri. That is a vacation market. It is already been regulated. The regulations are there, but that economy is built around short-term rentals. It's not going to go anywhere. They're not going to be affected. Their tax procedures are already in place. That's a whole nother world that we're walking into that different municipalities are dealing with now, is how are you going to tax short-term rentals? There are some municipalities that we're in that are just a complete disaster when it comes to tax reporting and how we tax report. They're wanting Airbnb reports, but we have properties all over the country that then we have to produce the reports for and then walk through that report and divvy out every individual property that's in just that city then. So that's just one municipality that we're dealing with currently from a tax perspective. But the first thing I'm looking at is, what do their regulations look like? What do their restrictions look like? What are the meeting minutes of the city or the county commissioners been over the last 6 to 12 months? Do they have a committee currently investigating this? For example, Kansas City is really big right now. They're looking at outright bans across different places. We walked out to Las Vegas, Henderson specifically. They have an area in which I think it's 600 feet or 1,000 feet. I have an Airbnb. There's a 1,000-foot radius that no other Airbnbs can be, and the permits fill up really fast. We have some students out in California that are really struggling to do that. So restrictions, regulations, where are they at is the number one thing that I'm looking for prior to even remotely looking on whether that property could be profitable or not. If I want to go to a market, normally people in short-term rentals, it's more of a lifestyle asset. So most of our investors want to also use the property in some way, shape, or form. And so they're looking at some place that they like to go. So really knowing those regulations prior to really moving anywhere else would be key. And if there's no regulations at all, I would be very careful to go to that market. I would rather have some regulations than none.
I'm glad that you said that, because I've heard that too, and it sounds counterintuitive, right? Why would I want to go somewhere where there's no regulation, right? It's free, but it's going to come, right? And so you don't want to be the first one there where you're affected. So what else are you looking for whenever you're going to a market?
A few different items. One is, what does our support staff look like as well? Starting to know the key to any market is it a vacation destination? Are they used to short-term rentals? If you're walking into a market, for example, we have a market, midterm market in Kansas that we're in, or that didn't have any individuals that had cleaned short-term rentals before. Therefore, we have to completely train them on how we need our short-term rentals cleaned, flipped, staged, which is fine, but you just have to know that moving in. So I would look at regulations. I would look at if this is a market that is used to short-term rentals, or am I walking into a market that is more an emerging market where there's not a ton of short-term rental, third-party services that are used to flipping short-term rentals, that are used to working on short-term rentals. Even your handymen aren't used to, hey, I have a flip from checkouts at 10 a.m., check-ins at 4 p.m. I need you there in the next 6 hours prior to the guest arriving. Even maintenance people, you have to get them trained on a guest experience versus what they're used to working on long-term rentals where, hey, I can go anytime with 24-hour notice to the tenants. That's what they're used to in most states. So first step, restrictions. Second step, what does my local support group look like? And now I'm going to start diving into the actual data of the market, using things like STR Insights or AirDNA to actually dive into that market and look at the trends to make sure that is that market still trending in a direction where I want to invest.
Okay. And so let's talk about so let's say you find a market, you like it, everything kind of lines up. Now, on the property size, I've seen some properties, let's say Maui, Hawaii, where it can be a 1-bed, 1-bath condo, but I mean, you've got a killer view, revenues in the 130 grand range, or you can go to a lake house market and it needs to be a 4-bed, 2-bath, or else, you're not going to get booked that much. So how do you determine the size of the unit?
That's a really, really good question. It's a few different items. Who is your avatar? So in multiple of our markets, our number one thought process from an avatar standpoint is going to be leisure travel, vacation travel. That's where all of our heads go when we think about short-term rentals, the vacation industry that's been around forever. But there's multiple different reasons for why we travel. Some people travel back home to see family. Some people travel for work. There's hospital travel. I actually have a cousin right now who needed a midterm rental in Oklahoma City, Oklahoma right now. Just happened 2 days ago. Got on Quest course. Who do they call? Me, because I'm the short-term rental guy. Family calls me and says, "Hey, how do we do this? Where do we stay? Hey, you need to go to Furnished Finder. There'll be people that will allow you to stay month by month. That's going to probably be your cheapest option available." So people travel for health reasons. There's military travel, corporate travel. I'm sure I'm missing a few life event travel. Hey, I'm going to this place for a wedding this weekend, or I'm going back home for a funeral. So there's a lot of different avatars. So really, I want to narrow down on my avatar. Who am I actually marketing towards when I'm talking about bedroom counts? If I'm near a hospital, I probably can get away from a 1-bedroom. If you're on the beach in Maui, there's probably plenty of couples that are going to come vacation where there's 1-bedroom. I'm good to go. Spot on with the lake house. Our lake houses in Lake of the Ozarks, I mean, we don't take anything under a 2-bedroom just from the revenue standpoint. We won't manage anything under 2 bedrooms, and I won't buy anything under a 2-bedroom because the revenue and the amount of time that it takes to manage a 2-bedroom, a 4-bedroom, a 7-bedroom, and a 1-bedroom, it's all the same amount of time. Nothing changes from my management time on that perspective, but my revenue drastically changes. STR Insights, I'll plug them really quick. They do a really good job. This is not an advertisement. They do a really good job of actually breaking down the bedroom count based on the property value. It's skewed a little bit. They're still missing some data points if you're looking state versus state, because some things that they don't factor in is like, what is our property tax rate? So their ROI percentage basis is only based on the purchase price, based on the average revenue for that bedroom count. That's a great way to really look into which bedroom count is going to be the most profitable. But then I would bounce over to AirDNA and really look at how many bedrooms do we have in that specific. So I'm looking to buy a 5-bedroom. I'm going to bounce over to AirDNA in that market. I'm going to look how many 5-bedrooms am I competing against in that market, and I'm going to go try to find as many of those 5-bedroom listings as I can and really dive into my competition and say, can I compete with these people with the property that I'm currently looking at purchasing?
So that leads into the next question, which is, should someone go luxury or middle class, right? And I'm sure looking at the revenue side of things, and I know it's market dependent, but on the revenue side of things, should someone kind of look for middle class, luxury? What do you recommend there?
I would recommend both. So that's not a great answer, but that's really market dependent as well. If you think through luxury in LA or New York versus luxury in Lake of the Ozarks in Missouri, you're getting two pretty drastic differences, and luxury can really be defined in multiple different ways. The people that are willing to pay for luxury in East Coast, West Coast versus the Midwest is going to be drastically different. Luxury typically isn't hit as hard during a recession from a historic standpoint. So if we're worried about a recession, I would look into luxury. But then also, what would I like to use? Most people that I know invest in short-term rentals. I think I said this earlier, are doing this for a lifestyle asset. Where do I like to go? Where do I like to stay? Is that what I'm buying this for? Or is this just simply an ROI investment? If it's an ROI investment, I'm going to lean kind of towards probably a middle of the road would be a safer ROI investment. At least in the Midwest it would be. If we're talking about walking into a recession, walking into a downturn, the big scary words, we already know we're here, but where can we insulate ourselves and make sure that our units, our investments are protected to the best of our abilities?
Hmm. Now, that's something that I didn't know is that luxury tends to do better in a recession. So, do you know why that is?
I mean, think through the individuals that are going to be booking those units. From a luxury standpoint, if you're already used to paying that dollar amount, more than likely your income hasn't been affected inside of a recession. You already have enough money from a recession standpoint. Now, the individuals that are capable of still paying that amount during a recession might go down, but from a historic standpoint, luxury is typically done perfectly fine. If you think through like a luxury hotel standpoint, um, those still did fine in the 0809 recession versus just your normal everyday hotel. Those actually went down quite a bit during the 0809 crash.
Okay. Okay. Now, Z, what is something that you see separates the novices from the experts? And I know, I'm sure we could unpack and talk about that for an hour, but what are a couple things that come to mind?
Short-term rentals are not the same as long-term rentals. I see a lot of individuals that have some investment experience inside of real estate bounce over or try to play in the short-term rental world, and they come to find out that it's not just, put paint on a wall, fix it up, fix and flip, lipstick on a pig, let's chuck some furniture in here and rock and roll. It'll rent. That concept works in long-term rentals. People are still just looking for a decent place to stay in a decent neighborhood. In short-term rentals, that's not the case. You really have to encompass the guest experience, and you have to focus on the fact that this is a hospitality business. This is not a real estate business. Yes, we are leveraging real estate to make money, but at the end of the day, we are hospitality, and this is hospitality companies, hospitality brands that are being built, and it all comes down to how do we treat our guests, and do we give them a great guest experience?
Hmm. So, how do you make the guest have the best possible experience?
Think through what you like when you're going to stay at a hotel or stay at an Airbnb.
Oh.
What are your preferences? I personally don't want to talk to a human when I check in. That's something that I liked prior to COVID. You're going to have some individuals still out there in this world that would prefer to go to a hotel, talk to a human being, check in, get a key, but you're still going to have a pretty large part of the population that is getting very used to, I get a text message on my phone with a code, I get the address, chuck it into Google Maps, I drive to the property, I know where to park, I know where to walk in, I know what code to put, and I'm in the door. So think through the guest experience from when they walk into the house. What's the first thing they see when they walk into the house? Do you have them walking in down a dark stairwell that's not well lit at night? Think through when your guest is arriving. Do your guests arrive at night? Is the place well lit outside? Do they have to walk up to a dark door? Is it easy to get into the property? Think through as they arrive, what is the temperature at the property? So we've deployed in all of our units occupancy-based thermostats. The thermostat knows when we have a guest checking in. The thermostat will automatically take that and bring it to a nice temperature before the guest arrives. I've stayed in units where it's a cabin in the woods. You have to get there, and there's some units you have to follow. There's some HOAs that you have to do this stuff with, between turning water off, turning it off, having a thermostat to a certain temperature when it's vacant. There's some outlying factors that eliminate this ability from some housing. But I've stayed in some places where I arrive and it's 50 degrees.
Wow.
Man, how nice would it be to walk into a 70-degree house versus a 50-degree house? Thinking those things through. Linens, towels. Does your towel look like it's been there for the last 10 years and you've never replaced it? Do your sheets make your body itch at night? Yeah, is the place clean? Is the kitchen stocked? Really, what is that guest experience from the moment they walk in the door to the moment they leave? What is everything that they're going to experience throughout that house? And have you really thought through everything that they'll experience, and is it a good guest experience from beginning to end?
Yeah. I'm so glad that you said that, Z, because that's something I'm more of the ilk of the long-term investor, right? Buy a property, paint it put furniture in it, make it look nice, and let's get the show on the road, man. Show me the cash flow, show me the money. And so many, 95% of those things that you just talked about, I would have never thought about. Occupancy controlled thermostats, the towels. I would think, you don't have streaked towels. That's probably a bad thing. But little nuances, like all those things that you mentioned are obviously so important. And, I'm just looking at dipping my toe in the water of that space, and hearing you talk about all those things really just makes me think, if I had 50 grand, I'd much rather give it to you, because that's something that I have to, I have to learn all those things that you just talked about. You already know them, you know the markets, and just go that way. So, I'm really glad that you shared that it is really something different compared to long-term rentals. So Zee, what is, looking back on where you've come from, what is one thing that you wish you would have known? So what is, I'll do that again. What is one thing that you know today that you wish you would have known when you started?
You can't just buy a property and expect it to produce money. It's not that easy. You can't expect everything to go right, for every guest to not have an issue with your property. I would say that we had the very first unit we bought. The very first guest that stayed turned around and walked out 10 minutes after they arrived because the place was not clean. I think they found some dirt under a bed, maybe a sock under a bed or something along those lines. Now, we bought a turnkey operating Airbnb with bookings already in place. So we did take on some existing guests. I think the fourth guest we had, it was their honeymoon, their wedding night, and the water went out or something crazy happened. I don't remember exactly what it was, but I think there was no hot water, or they couldn't get water up to the shower. Something crazy on like a Saturday night at 11 o'clock at night, and it's like scramble because it was our first ever unit. It was a brand new market. I didn't have a boots on the ground list of who I could call at 11 o'clock at night, so I'm on Google calling every plumber under the sun trying to get somebody out there just to find out we can't fix the issue, and then having to call a hotel, put the guest up in a hotel, try to make it right, lose money on the deal. But yeah, just there's in short-term rentals, in all of life and all of real estate, we're going to run into bumps and bruises, but there's, at the end of the day, there's just so many things that are going to happen inside of that rural. We've had some really crazy stories. We've had people shoot guns on our properties and we had no idea.
Wow.
But yeah, just the things that are going to happen, you're just going to have to roll with the punches, do the best you can. I see seasoned hosts all the time just say, I've hosted 500 people and I've never had anybody treat my property like this. So it's just going to be it's going to be up and down. There's going to be some roller coasters. There's going to be some awesome guests that you become lifelong friends with. We have guests that have stayed with us 20 times over the last few years. And there's going to be guests that lead you to your number one investor. That's the craziest story probably ever. They had a bad stay with us, and they ended up investing in one of our properties just based on how we fixed the issue. So yeah, it's just been it's been a crazy wild ride. If there's one thing, it's not whatever expectation you have, just chuck it out the window because it's not going to go that way. Just get ready, hold on tight, strap yourself in.
Now, Zee, I think that's a misconception some people can have, and that is that when you own a short-term rental, the neighbors are going to get upset. What if I have to call the cops? And I've heard some people say that out of 1,000 bookings, that's happened twice, and it was because something funky happened. And so in your experience, is that something people should really be worried about?
From a neighbor standpoint, I think we do a really good job of trying to meet the neighbors when we're launching a unit now. We didn't at first, but now it's really important. Those neighbors they can make or break your STR. They could be your biggest asset or your biggest liability. And so really nurturing those relationships, I'm just trying to think through like all of the neighbors that I've given my cell phone out to over the years. Some of them have reached out to us. Some of them are friends now, and they're actually potential clients as well. How many times do you think that that person has a daughter or a granddaughter that's going to be coming? Oh, I have an STR right across the street. We'll just book it with Zee. Like, let's just book it over there, and then we can all hang out over there together versus you completely overtaking my house.
Nice.
So from a neighbor standpoint, make them your friend. There's obviously going to be scenarios where people are just ridiculous and they're impossible to work with. But if we can set the expectation up front, hey, here's my cell phone number. Here's how you can get a hold of me. 24/7. You call me if there's an issue at this house. We will get it taken care of. We'll get somebody dispatched. But there's been instances where the trash can stayed out too long, or a raccoon got into the trash can, and the neighbor went and cleaned it up for us. And hey, how much do we owe you? Nothing. Don't worry about it. We were just helping out. Okay, I have your address and I have your name. I'm sending you a $50 gift card. Thank you for doing that for us. So just those little touches to really build that relationship with those neighbors can really be beneficial on any of your STRs. When you're setting them up, take them over a little pamphlet. We have little pamphlets now that just say, hey, this is who we are. This is what we do. Here's our 24/7 guest line. If you ever have any issues, reach out to us. And then in some instances, we've actually built, if the neighbor becomes somebody that's telling us about the property, we've actually built out Slack channel chats with them. So therefore, hey, you could just send us a note really quick if there's something wrong with the property, or you see something out of line, guests aren't doing what they're supposed to be doing, just let us know.
Mm-hmm. Now let's talk a little bit about your company. So how do you structure your deals? You talked about joint ventures, syndications, property management. So how do you structure those?
Yeah, so I think there's probably 4 different business models we do now. There's rental arbitrage, where a landlord or an apartment complex can actually come to us. We'll rent that property at a fixed amount. We'll operate a short-term rental out of it, and whatever our profit is what our profit is. In that scenario, we're taking most of the risk. We're furnishing the property. The landlord is really treating us like a long-term tenant. That's pretty popular across the U.S. There's quite a few rental arbitrage. Rent-to-rent is what it's called if you move outside the country. There is what we call co-host, where we take a designated percentage depending on what type of investor you are. That ranges from 15 to 25% of revenue. And then there's a fixed monthly fee as well, but that's co-hosting. And we'll come in and we'll build out and do as much or as little as you would like us to do based on that. And we manage your property, send you a monthly report every single month, and make sure that your accounting's correct, all that fun stuff. There is where we actually co-own properties with individuals. So there's a 4-unit that we currently co-own with somebody. We structured that deal in kind of a creative way where that person brought the capital to the table. We bring our expertise to the table. We split it from an equity standpoint. We make sure that cash flow is going back to that investor first. We get their capital back out of the deal as fast as possible. And then thereafter, when we hit that point, we get more of the profit based on how we return that to the investor. That's more of our JV deals. We have, of course, full syndications where we've done a couple 30-unit resorts, a few $1 million that we needed to raise. I still have one raise going on right now, but each syndication is kind of a little bit different. I'm sure you've done syndications where the terms are always just a little bit different. And then the one we're working on right now is more of a back-end involvement. Let's say you're a host with 10 to 15 units and the actual operating side of it from the virtual side is just really getting to you. We have 2 models out right now. We've got a fixed price model where we charge you X amount of dollars per month to run that, and then we have a model where it's just a set percentage of revenue. We'll run the back end operations, do all the cleaner coordination, the vendor coordination. So the day-to-day stuff is really taken care of, but we still need that individual in place. Whoever owns the properties or potentially is managing those properties, we still need that person in place to answer kind of the higher level questions.
Okay. Now, I think we're going to have to start winding this down, but before I do, I want to ask you one final question before the final 3, and that is, seeing back to where you've come from, what's been the biggest trial that you've had to overcome?
All the way back to the beginning of time?
No, I mean, you could talk about your business. I know it's an easy question.
Yeah. The biggest trial I've had to overcome, when in 2018, I lost my W-2 job. When my first little girl was born 2 weeks later, and that would be probably the biggest trial that I've had to overcome. So yeah, that was kind of that one was hurt. That one hurt. That was a big one. So yeah, that was in 2018. It took us about three and a half years to recover from that. So it took us a while, but yep, that'd be the big one.
Wow, I feel like we should have started with that.
We could spend like an hour on that.
I know. Shoot, we got to do a round 2.
Part 2 someday.
Part 2, yeah. So, all right, we'll go. That'll be a teaser for next time then.
There you go.
So the final 3 questions. The first is going to be, if you can recommend a book to our listeners, what would that be?
My favorite book, and this would be for individuals that are trying to build teams, but Who Not How by Dan Sullivan. That has been probably the most instrumental book in our company's growth, from finding a COO to finding a CFO, to really starting to place our virtual assistants in the seats that they need to be in. It's been so instrumental. So if you haven't read it and you're an entrepreneur that's, feels like you don't have enough time in the day, and I think it came from this book, but there's a quote in there, and I'm not going to get the quote completely correct, but it's, procrastination is wisdom telling you where you need a who. Something along those lines. That was probably my biggest takeaway. I'm fairly certain it comes from Who Not How. But yeah, if you find yourself procrastinating on something, you need a who in your life. Figure out who that is, get them hired and in place, or in some instances it's a lawn care company, or somebody to help fold laundry or help cook for your family. Really, what are your goals and aspirations, and where can you land there?
Mm-hmm. Now, Zee, if people want to learn more about you, where's the best place for them to do that at?
Yeah, creekwoodvacations.com would be the best place to go currently. And then Zee Langford on all media channels. So Zee, and then Langford's Langford. Should be the only one to pop up if you Google me too. Strategically put that in there.
Perfect. Definitely go check him out. And the final question is, if you can share one final thing with our listeners that they can take away from today's show, what would that be?
If there's negativity in your life, cut it out. That was one of the biggest things for me individually, that you just got to get rid of the negativity in your life. So whoever that is, or however that is going, but negativity, and that biggest thing I would say is that can be yourself as well. So do you have negative self-talk? Do you talk down on yourself? Are you too hard on yourself? But yeah, that negativity can be anywhere from friends and family all the way up to yourself. But negativity, I got a fly flying around my head now. Get out of here. Until it's warming up, there's a fly out now.
Yeah.
Finally warming up. But yeah, where's the negativity, and get it cut out of your life as fast as you can.
Okay. Perfect, brother. Zee, thank you so much for being here. I really gleaned a lot from this conversation and just spending some time with you. So I appreciate you taking the time.
Yeah, for sure. Thanks for having me, Caleb.
And everyone tuning in, we'll catch you next time. Bye.
It's time to grab your victory. Find us on the web at redseacapitalgroup.com and follow us on Instagram and Facebook at Red Sea Capital Group.